Good morning. This is Manjeet Singh from Manjeet Singh CPA PC at Lomans Plaza. I have Kusum Ramachandran again here with me today.
Morning.
And good morning. And today we're going to talk about the first time home buyer credit. When the law was passed, I spoke on Sagarmatha TV program at that time. But today I would like to have a different perspective. I'd like Kusum to tell us what the first time home buyer credit is.
Thank you, Mr. Singh. Good morning. The first time home buyer's credit is part of the Housing Act of 2008, and a lot is being made of it. What it is a $7,500 credit on your tax return for 2008 for first time home purchase, provided that you fall within the income limits, which is there is a phase out between $150,000 and $170,000 for joint couples, and that's between $75,000 and $95,000 for single individuals and heads of household, and married filing separate, I guess. You have to not have owned a house in the 3 years preceding the year that you qualify for the credit, and the total amount of the credit is $7,500. However, even though you get a credit on your tax return for 2008, this really is an interest-free loan because you're supposed to recover this credit in installments of $500 over the next 15 years. In other words, you have to keep paying back at the rate of $500 if you take the whole credit of $7,500 in the first year. If you sell the house in the meantime, or if you sell the house, then you have to recover the entire credit in the year of sale. If the property passes on to successors or heirs due to death, then you do not have to recover the credit. And so even though the credit is available only on the 2008 tax returns, it's good for purchases all the way up to July 1st of 2009. So if you have not yet bought a house, you still qualify. You have until July, and you can either file for an extension and file your tax return late, or if you file a timely return, you can amend it and take the credit on your 2008 tax return. I hope that helps our viewers some.
All right, so let me interject here a little bit. So basically, even though they say it's a credit, theoretically, it's a loan given to you. Assume that it's the loan that you're going to spend the money out of your pocket today, and when you do your tax return, you're going to get a credit, or your taxes will be reduced up to $7,500. And then, of course, you have to start paying back the $500 per year for the next 15 years. If I'm not mistaken, if the memory serves me correctly, I think the repayment schedule starts in the year that we file tax returns in 10.
Yes, 2 years.
The tax return for income tax returns for the year 9 that will be done in 10 is when we're going to start paying the $500. Hey, folks, am I right?
I think it's the 2010 tax returns that are filed in 2011 that you make your first recovery payment.
I hope that's correct. So it is a tax-free loan, ladies and gentlemen. And as you know, the economy is not doing well. There are houses available, townhouses available for $100,000 in certain area of our economy, or in our Washington area. So guys, if you have the daredevil, go ahead and spend the money. This is Manjeet. Until next week.
Thank you for watching.